In the end, a market is meant to be for the use of the actual end users, producers and consumers, and just people, you know? As soon as we forget that and start to imagine these markets are for investment and things like that, you lose the real soul of those markets and it becomes very, very dangerous. This is especially important when you're talking about a market that has direct implications for ordinary people's lives, and especially for vulnerable people's lives.
The original purpose of futures markets was so farmers could transfer the price risk of their harvest. Quite literally, a futures contract allows you to sell your produce now at a price agreed now, but for delivery in the future. Now, on the other side of that contract, there might very well be a speculator. And that's all well and good. The problem recently is that we have many more speculators in the market.
The arrival of large and numerous financial investors, pension funds, hedge funds, investment banks on these markets have dwarfed the role of the traders in the physical thing.
Maybe 10 years ago, about 10% to 15% of the market were speculators. Now it can be upwards of 50%.
The derivative markets are separate from the real-world food markets, but that derivative price acts as a benchmark from which people in the real world are referencing their own personal deals when they're actually trading real corn from Russia to somewhere else. So you have this contamination of the futures price into the real-world food markets.
Over-speculation can really affect price. It can drive high prices higher and low prices lower.
Today, the volatile prices on international markets for agricultural commodities is a major obstacle to poverty reduction. At the level of families, an increase of 30-40% of the prices of the foodstuffs that they buy can be the difference between adequate standards of living on the one hand and extreme poverty on the other hand. And extreme poverty means for these families selling productive assets. It means removing children from schools because schools do not become affordable anymore. And it means falling sometimes in a poverty trap from which it will be very difficult to re-emerge.
In these markets, there are a few overt cases of people deliberately trying to manipulate the markets. One famous example is the hedge fund Armajaro with Chock Finger, one of their managers who went in and basically hoarded cocoa futures in an attempt to drive the prices up. In some of the bigger markets, it's much harder to do that, but you have the sort of collective effect of lots of people coming in at the same time.
The logic of these markets has changed because the price evolutions are dictated not by the long-term evolutions of supply and demand or by the quality of the harvests in any particular year. The evolution of prices is really increasingly dictated by the sheer fact that some major financial actors bet on higher prices, leading other actors to follow suit, and this provokes the very increase in prices that these actors have speculated upon.
There's a real moral imperative for acting now. Our global markets for food should not be dominated by speculators. They should not be dominated by gambling. We need position limits, and we need them as soon as possible. Position limits cap the proportion of any particular commodity market that can be held by speculators.
If you look into the future and you project the increase in the number of these financial players going up, it's only going to get worse and worse unless position limits are brought into place.
It is very clear that the current attempts at regulating and I dare say moralizing these financial practices will meet with resistance. There is a very well organized lobby of the financial services industry and they have very much influence on the governments making decisions in the name of citizens. So this is an area in which governments must act responsibly, in which parliamentarians must hold governments accountable to their promises. And I think amongst international agencies, the OECD, the IMF, the World Bank, the FAO, all recognize today that financial speculation has a negative impact on stability of prices on agricultural commodities, and it is now time for governments to act.